Good evening from Chicago. I'm Charles Brown, Portfolio Manager with CB3 Financial Group. It is Thursday, March 26th, and welcome to our weekly market overview. This is our third episode, and this has got a couple changes in it from the last two times. First off, if you're on our mailing list, you should have a copy of the slides by now. If you do not, please send an email right now to aab@cb3.com. and she'll be glad to send you a copy of the slides. That's AAB, Alpha Alpha Bravo, at cb3.com. That's Alice. So just want to thank you guys for joining. The two changes are that, first off, last two times we did this, episodes 1 and 2, were just clients only. I've opened this up now to a few more people that saw us on Facebook and wanted to be included. So we're glad to have you. And the second change is going to be that I'm going to try to take questions without you having to hold on to them till the very end. I'll try to take questions as we go along, okay? Welcome, Lydia. Welcome, Keith. You guys be sure to sign in so I know you're there. We'll take the first 5 minutes or so just for people to sign on and just to cover a few points here before the actual presentation. The same motto that I had last week applies this week, and that is adversity is inevitable. Misery is a choice. And we are choosing not to be miserable during this very, very difficult time. That doesn't mean that we have not had some misery in our lives, and certainly we know people who have had a great deal more than Alice and I have had, but we are choosing to not have a miserable outlook. And that's because of many things that are going on at the government level, at the personal level. We think this is a time that we're being tried, and we're going to be stronger at the end of this. So we're excited about that. The U.S. is on track for a 43-day curve peak in the coronavirus, and that matches South Korea. So the same kind of curve that we talked about in last week's presentation, we're seeing that for the U.S. So we're still rising right now, and you'll see some stats in just a little bit on that. But we're expecting that to be about the same 43-day window. Now, in a rather amazing outcome here today, the Dow has risen, the Dow Jones Industrial Average has risen 20% off Monday's lows. So if you look at that technically, we had a 3-day turnaround from a bear market, the low of the bear market, which was Monday, to what essentially is a bull market in the Dow today, because there's been a 20% move. Now that might seem crazy to you, but I'll explain that as we get into the presentation. Tuesday through Thursday of this week have been the best 3-day rally since the Great Depression in 1933. You're going to see statistics tonight that are just mind-boggling. I mean, so much has happened in a very short period of time. So I'm seeing more people log on. Welcome, Tommy. So you're going to wait till probably 5 or 6 minutes after to start the full presentation. But let me just tell you a little bit more about what we're doing, especially those of you that are new. We have clients on the line here that are used to me doing these slide presentations, and I send them out ahead of time. If you would like to get a copy, as I mentioned earlier, just send an email to aab@cb3.com, and you'll be put on our mailing list. Good evening, Rex. I see you joined us. Here's what this event is. I'm a portfolio manager, as I introduced myself earlier. I manage actual money for actual clients. I manage our family money, our IRAs, our trust accounts. We have a full 7-figure commitment to our programs. And our clients trade just like we do in the same programs, obviously in segregated accounts. And their allocations may be a slightly different mix than mine. But you can find plenty of sites out on the internet if you just want to hear somebody talk about where the market may go or what's going on. And you can find plenty of sites politically where you can have people criticize what the president has done or stand behind him, or criticize what Congress and the Senate and the House of Representatives has done, or stand behind it. But we aren't that place, okay? Hi, Fran. Glad you're with us. This site is specifically for people who want to talk about what is happening in the markets and how it's affecting their portfolios. Now, that doesn't mean that I'm not sympathetic to what's going on. Good evening, Hossein. Glad you're with us. Doesn't mean that I'm not sympathetic to the human element, which is an enormous one, obviously, and the medical element. But it's just that I need to focus on what I can control. And as a portfolio manager, I have a significant interest in our own family money, obviously, but then in all of our clients and keeping them informed with what's going on out there. So I'm going to invite you to ask any questions. There we go. There's somebody that wanted, Tom wants a copy of the slides. Alice, you can send those to him, please. I'm going to answer as many questions as I can. I got a text from Mark. Mark, just go to CB3 Financial Group on Facebook and you should be there. So, all right. Give it another minute or so and then we'll start. So if you guys have the slides, just call it up there. But it's an amazing time. What the moves, the breadth of the moves, not only to the downside, but now here to the upside. I'm looking at the overseas markets, and even right now in the Asian markets, the S&P 500 is up 50 basis points. Now, that's a pretty quiet move based on what we've had recently, but normally that would be a pretty good size move. But we're seeing a lot of crazy stuff, folks, and we're going to address that. And we'd like you to ask questions, whatever you'd like to know. Good evening, Jeff. Thanks for joining us. Okay. So if you look at your presentation, use the Facebook app to avoid website issues. That's from Chris. Welcome, Chris. Thanks for being here. Yeah, so I don't know how else you'd try to reach us, but the Facebook app should be here. Julie, thanks for joining. Tom. From Wisconsin. Thanks for joining. Yes, I think you're back. So I hope we're not having any website problems. So like last week, part one is just the current state of the markets and the coronavirus. Two are questions that have been given to me since last Thursday night. And then three are more live questions. I'm going to try to answer questions as I get them tonight, and then I'll have room for more at the end if you want. So from Chris, the website has some access issues and web permission errors. I'm not sure what's going on there. If anybody is not able to stay on or they get knocked off, if you just go to Facebook and CB3 Financial Group, we're right there, just like last week. It should be identical to last week, I hope anyway. So thanks for the feedback. I see that Alice is here. That's great, guys. Okay, so on your slides there, look at the latest numbers. We're almost at almost 500,000 cases here. We're going to be that probably by the end of the night. 21,000 deaths globally. The big number is the last one there, the 12,000 new cases in the U.S. yesterday. We don't have data for today, up 9,900 or 10 grand. So that's almost a doubling, not quite. And I see from Chris, if you use the app, it's flawless. Thank you, Chris, for the feedback there. Okay, if you're on an iPad or an iPhone, the app is flawless. Apparently the website's having a little bit of problems here. So, but that's important to know. We're still on the upturn, so our peak, I'm trying to do this backwards because you guys are seeing the inverse of this. This is where China and Korea are. They're heading down. We're still heading up because we're a few weeks behind them, and that's why I'm doing this every week. Evening, Charlie. Thanks for joining. Trying to do this every week just to keep you guys up to date with what's happening. So the next slide is a picture of the S&P 500. There's two pieces of this I want you to see. First off, the very small red and green lines or blobs, if you will, on the left-hand side of the chart. That's a full day's trading range. A green is an up day, a red's a down day. And then when the bars get really big, that's what has happened since the market started to break down after the lifetime high of February 19th. And then it reached a low of March 23rd. And as I mentioned earlier, if you see those huge bars at the bottom, that's what we're doing right now is fighting this out to determine what we call a basing formation. And technically the Dow, although not everybody, not every market I should say, is in a bull market, the Dow has been. So, Jeff, will you be looking at the pharmaceutical companies that are working on testing and antidotes? Not specifically in this presentation because there's so much to cover, but I do plan to cover that next week when I have a little bit more definition. Thanks for the question, Jeff. So that's chart-wise what we're looking like. Notice that all the markets are down. So when I say a certain market is doing better, for instance, the NASDAQ is doing better than the Russell, the NASDAQ's doing better than the Dow, that doesn't mean it's making money or it's going up. In this case, it means it's losing less. And realistically, folks, losing less is a really good thing in this kind of market environment, okay? So part one, what's the current state of the virus and how it's affecting the markets? Well, the first data point I have is actually a positive one. The February durable goods order actually rose, although if you strip out transportation, it fell, but not nearly as much as it had been expected to. Now, again, that's where we are in this period of market performance. When I say it's a good report, that usually is going to mean for the next several months, and even looking backward for a month, that it's not as bad as had been anticipated. The second bullet point there is just saying, well, okay, things look pretty grim in the U.S. here in Illinois. We are locked down. We are not supposed to leave unless we have a very specific reason to care for someone else or to get gasoline or food. But Johns Hopkins and the Nuclear Threat Initiative, NTI here, ranked us as the best prepared country for a pandemic. Now, I'm not a medical person. I have no way of knowing if that's accurate, but I'm encouraged by seeing that data point that just came out yesterday. Many people have asked me, well, when is a new bull market likely to happen? Well, an average length, and this was last week, if you want to go back and watch that video, is about 19 months. Well, for the Dow today, or this week, it was 3.5 days, which almost just seems incredible. So if you look at the data point there, if the Dow closes above 22,310, then technically that means it's a new bull market. And as I look at the close on the Dow, it was about 22.5 and change, okay? I'm going to get more into this later on because I know it seems strange. I had a question saying, how can we be back in a bull market? Well, it's pretty strange. Question from Tom about looking at items need to correct on the curve of the virus, vitamin A rich foods. That's great, great stuff. Probably not going to address that tonight, but I plan to have more on precautions and what we're doing in America as we get closer to the peak. That's what we're trying to do, is get up to that peak and see what remedies and what recommendations the healthcare professionals are making. Good question, Tom. Thank you. Okay, so going forward, here's the startling statistic. A normal Thursday report for weekly unemployment is between 200 and maybe 235,000 jobs lost. Today was 3,283,000. It's so huge a number, you can't even fathom it, really. The prior record was in 1982. 1982, so you're looking almost 40 years ago, and that was 695,000. So this is fourfold plus worse than that. So the takeaway, obviously, is that things are really, really bad out there from an employment point of view because we've never had a situation where we've had to shut down the market to this degree. It's just a stark reflection of the times we're living in. That said, there's really good news from the Federal Reserve, and we'll get to that. At least in Illinois, most businesses will not reopen this month. Now, you've probably been hearing from President Trump that he hopes to have a partial reopening on Easter Sunday. He keeps saying, that's a really special day, and maybe we can make it more special. That's an interesting way to put it, but I'll give him that. I think my estimate right now is we're probably going to see 40 states, not 50, 40 to 42 states reopen on Easter Sunday. Part of what's going on right now, this enthusiasm that you've seen in the last 3 days in the market, is that the Federal Reserve came out this morning and made some major, well, actually, they made the announcement a couple days ago, but they talked about it in more detail. Fed Chairman Jay Powell mentioned there's really no end to what we're going to do to backstop this economy. And we talked about last week, what does backstop mean? Well, backstop is what you do in a baseball game when you have a fence back there to keep the ball, if the catcher misses it, from rolling into the next county. You stop it so it can't go any farther back. And that's essentially what the Federal Reserve has said that they're going to do. They can make loans, they can increase the flow of credit, they can spend an unprecedented amount. Basically, they, unlike us, and unlike the states for that matter, they can print money, which we can't do. So that's a pretty big deal for him to make that statement. Tom joined, thank you. So it's not a typical downturn, and you're going to see some harrowing data on the next few slides here. But Jay Powell thinks we're going to have a good economic rebound. The president says it's going to be a great economic rebound. You can draw your conclusion from wherever you want. But both men, both leaders feel like there's nothing fundamentally wrong with our country, and I strongly agree with that. Unlike the downturn of 2001, 2002, 2008, 2009, even 1987, we were in a bear market in those situations. We were not. We were at lifetime highs on February 19th. And then the virus caught on and changed everything. So financially, fundamentally, we are a strong country right now. On the next slide, you'll see how this $2 trillion that the Fed is going to start doling out. And by the way, the Fed doesn't dole out anything. I'm saying that they give their direction, and then the Treasury Department of the United States actually puts this out. So you can see how this breaks down. We've got $500 billion in loans to businesses. Those are forgivable loans, by the way, as long as you keep 90% of your workforce employed. So rather than just give employees money, what they're doing is they're paying businesses with loans as long as they don't let people go during this downturn. That's a real big, important statement. You'll see in green there those household payments of $301 billion. These are all in billions, by the way. Tax deferrals, unemployment insurance for airlines, aid to states, $150 billion. I guarantee you a whole lot of that's going to New York City, which clearly is the epicenter on the planet right now. So I'm going to stop right here and just scroll through. Do I see any questions? Anybody? So you don't have to remember to the end. Anything from what I've shown you so far? Okay, I'll keep going. To get an idea of the magnitude of this bailout or emergency or rescue fund, whatever you want to call it, look on the left side at the stimulus package that was introduced in 2009. Now remember, March 9th, 2009 was the low of the previous bear market, okay? And the financial system had pretty much collapsed. The market was down 53.5%. at its lowest, March 9th, 2009. So we haven't even gotten close to that, really, at 33.5%. Well, I guess you could argue it's close, but it's not that close. But this incentive package, if you look on there and see the number in orange, 9.3%, that's the percentage of gross domestic product that this bailout is. It's huge, almost 1 in 10. What that was. Backfire out there. Sorry to scare you. It kind of scared me. 10% of GDP, when they go back and look at the data for 2020, is going to be this bailout. It's pretty amazing. Pretty amazing. The scale of this bailout has to be the way it is because of what's on this graph. You can see the 1st of March, the 9th, the 10th, all those tiny little bars in there. That's the number of employees going to work, increasing, decreasing, and then you see these massive bars. As recently as Tuesday, that's the most recent data I have, 61% of all small business workers were not going to work. And of course, that's because of the self-quarantining that we've not only chosen to do, but that's been ordered in some states, Illinois being one of those. So how does this affect what we think is going to, essentially mar the performance of 2020 in regards to gross domestic product? If you look at the chart, you see the yellow highlight for 2008, 2009. Now think back to how much that hurt and how astounding that was in the downturn that happened in a really short period of time, just about 18 months, I should say. Now look on the right-hand side, and that, of course, is not what's actually happened, because our most current quarter was just confirmed today, by the way. Fourth quarter GDP came in at 2.1%. We look just fine. But when they project what the first quarter is going to be, it's going to be down 10%, and the second quarter could be down 25%. We don't even have data from the Great Depression that's this bad. Now, why am I not sounding morose about this? And that's because of the backstopping, because the Fed knows this, and that's why they created these draconian measures, to make sure that they are capable of stepping in and stop this downturn. Okay? So which industries are going to mostly be affected? And then this comes to the judgment part. It's too early in the process on this. Welcome, Nellie. Thanks for joining. Which industries are going to be most affected? Well, you can see on this chart, leisure and hospitality, which everyone's heard, right? Nobody's going on cruise ships, nobody's flying, or very few people are. Hotels, they're closing hotels in downtown Chicago, except for those that have been commandeered for basically, makeshift hospitals for the number of cases that we have in Cook County. But there are plenty of sectors: government, healthcare, professional services, financial activities. I mean, I'm able to sit here and work in a self-quarantining room and bring this to you, so I'm able to do my job. And of course, the utility companies are massive, and they, don't have the number of jobs, obviously, that the other sectors do. But as a financial portfolio manager, this is what we're going to have to spend our time doing over the next many months. And again, I know there's a humanitarian component, a huge one in here, but as your portfolio manager, or as a portfolio manager, if you've just tuned in as a guest, we have to look at where the damage is and which ones are the ones most likely to come back the quickest. And that's where we have to put our clients' money. That's what you guys are paying us to do. So this is my summary. I think the United States healthcare sector and the economic front, or the future for this country, are inextricably linked, i.e. they're joined at the hip. There are necessary health decisions that are being made right now, literally to protect the human race in North America. And they're going to result in some dire and dismal economic numbers. We've already seen one this morning. We'll have another one on Friday. We'll have more next week. And then April 2nd is the first monthly employment data, which should tell us a whole lot about what the actual economic impact is. No country in the history of the civilization of the earth has had this kind of economic upheaval in such a short amount of time. It's just amazing. All this said, it's my deeply held belief that we will not only survive this, but we will emerge a stronger nation. And I say that based on the way that we responded to 9/11 and the changes that happened in personal behaviors, but also at the government level with the TSA, with just taking things more seriously as far as how we fly and the security with how we fly. So America needs to create an economy that can operate under pandemic conditions. And that's what we're going to discover. Just like we had to create an economy that could fly safely with so many countries out there that would like to see us toppled. Okay, what are the changes that could happen? Touchless delivery, where deliveries are made and yet nobody signs for anything. Temperature checks at retail stores, at concert venues. Okay, these are important things. I'm a musician. A lot of you guys know that, a composer, and I can't go see concerts right now, but I would welcome a device where if somebody had too high a temperature, they wouldn't be admitted. Okay, it's important. Okay, welcome Martha. Welcome Martha and Hossein. Let me finish this and then I'll get back to you there. So I think this is going to be an expansion of health clinics, in-home physician services, daycares that are social distance compliant. I have one daughter who's in the nannying business, and I have another daughter who teaches in a public school system and uses daycare, so this will affect both of them. But building these kinds of services will require not only an entrepreneurial activity or creativity, but a lot of labor. And the labor force is going to be redirected in new places. This is what we do for you as your portfolio manager. We watch and see the changing trajectories of the flow of dollars in America. We don't know what those are yet, but that's why we're meeting with you here on a weekly basis so we can stay in touch with those. All right, before I go on to part 2, let me go here. Martha, couldn't get on with your app, clicking the arrow, had to scroll down. Sorry. It worked last week. I'm not sure what happened this week, but thanks for your comment. Glad you're here, Martha. Hossein, three drugs. Any of these similar to true optimistically as early as May of this year? I will look into this, Hossein. Thanks for mentioning that. I really appreciate you being here. I was going to give it another week because I have another module here that's going to take a little bit more time, and I want to try to keep as close to the 30 to 45 minutes as I can. Part 2 of this has been to answer questions that were asked of me since last Thursday night. So whenever I do one of these, people either email or call me and say, hey, could you cover this? And last week, I think I covered 4 questions. This week, I'm only going to do 2. Because the second answer is pretty long, and but I think it's really important. So the question I had here, and you'll see it on your slides, why did you say that we're now in a bull market? We're back in a bull market. My accounts are way down, and we have high unemployment. I mean, that report just came out today, right? 3.3% unemployment, and that is true. It's an excellent question. And I think the definition of a bull and bear market might be differently defined than you envision. So let's look at that. What does it mean to be in a bull or bear market? So a bear market begins when prices trade 20% down from the high. Okay, so let's say that a stock or an index or whatever, it can be anything. It doesn't have to be the stock market, but let's say it's at 100. And it has a closing price, last week of 80. Well, that's 20% down, okay? And let's say it continues to go down, and it goes down all the way to 60. But that's the low, okay? A bull market begins when prices trade 20% up from the low. All right, so 20% of 60 would be 12 is 72. So when that price goes from 60 to 72, that's the beginning of a bull market. Now you might say, well, gosh, the stock is still a long way from lifetime highs. And that's true. I mean, the shortest day of the year as far as daylight is December 19th. But on December 20th, the days are getting a little bit longer, but that doesn't mean there's more daylight than, nighttime, right? That happens at the spring equinox, and markets work the same way. So technically, the Dow is 21% off its low set just Monday. And if they do declare this, which I guess would be the stock exchanges, S&P, that it's an official bull market, it's the shortest one in history by a long shot. So that's why that happens. Typically, bull markets last much longer than bear markets. On this next slide, you can see we've got a minus 26% in a bear market from 1956 to up 85%, down 17%, up 81%. From 1974 to 81, up 288%, and then down 39%. So here's the thing. When you're looking at numbers on a page like this, you go, oh, well, that's fine. That's not a problem. But when you're actually experiencing it, it's a very different experience. It's a very, very different experience. So if you catch yourself feeling kind of queasy during these last 3 weeks or so, 4 weeks, you're not the problem and you're not the anomaly. It's queasy for all of us. Okay, the second question that I got, and this is the one that's going to take a little time, but it's one that I've gotten probably for 35 years since I've been doing this. And that's this. Why can't you simply sell when the markets drop and then rebuy when the markets are recovering? Why can't you do that? And that's an excellent question. Here's an example, and this will take maybe 5 to 7 minutes, of why it's just not that simple, okay? Scenario number one. You have $100 to invest in ABC stock. $5 is the maximum you want to risk. So you actually set what's called a stop. You can either do it with a broker, or more than likely you're going to do it online in today's technology. You place a stop order at $95, which means you're going to get out of the stock at 95 or wherever you get filled. By the way, there's no guarantee that you'll get a fill at 95. It could be 94.80 or even 93 if it's a very fast market. Okay, so you buy your share of stock at $100. The following week, the share is selling for $105. The next week, it's selling for $110. You made $10. You're a genius. Wouldn't it be great if all trades went that way? That's scenario number one. Very simple. Scenario number two, you have $100 to invest. Again, $5 is the maximum you want to risk. You place that stop order at $5. You buy the stock, and the following week, the stock is selling for $89. Well, you just lost $5 in 1 week. By the way, if you did that in today's market, that could be 2 or 3 minutes later or less. Stock goes down to 89 and drops to 76. Now, you're happy that you got out. You're not thrilled, but you only lost $5 when the stock's going to 76. Again, if every scenario were this way, it would be much easier for all of us. But here's scenario number three. You still got that $100. $5 is what you want to risk. Put that stop in. The market trades down to 95 and you sold it. The following week, the stock is selling for 103. The term we use colloquially in the industry for this is called whipsaw. Have you ever taken a saw and whapped it and see how it goes back and forth? That's something that can happen in the stock market. So you have a decision to make. You have a decision to make. You either have to wait for the stock price to drop to the original $100 and then rebuy it, or you can rebuy it at 95 so you have no loss. Well, okay, you're going to rebuy the stock at 103, or you're going to wait till it goes down. The problem is, what if it never goes down? And now you're out of the stock and the market's at 115. Okay, can happen. Scenario four, you have $100 to invest in ABC stock. You place a stop at 95. The stop is hit. After trading to 92, ABC now trades for 103, kind of like what we just had. You decide to buy at 103, FOMO. You guys know what that acronym means, fear of missing out, and you risk $5. And now it goes down to 98, and now it's at 97, and you think, you know what? I'm not going to get stopped out again. I'm going to buy twice as much, so when it goes up, I'll be there. Well, within 2 weeks, ABC is trading at $78, and its quarterly earnings report is tomorrow. And now you have a big decision to make. And not only that, you might have 31 or 35, whatever stocks in your portfolio, and you've got to do that analysis on every one of them. So what's an investor to do? Just buy and hold? Buy and hold in many ways really just means buy and hope. Okay? And here's why. Here's why. Let's say you've decided you're tired of this whipsawing that I just described, and you decide you're just going to buy a bunch of stocks and diversify. So it's 1990 and you buy Enron. It's 2000 and you buy Kodak. 2001 and you buy Lucent, formerly Bell Labs. 2001, pardon me, that was Lucent. 2003, you buy Eastern Airlines. In 2007, you buy Blockbuster. 2011, Barrick Gold. Today, your portfolio is worth less than 10% of what you paid for it. There's simply no easy answers. I wish there were, but that's why you can't just buy it when it, or pardon me, sell it when it goes down, whether it's a stock or the entire market, and then rebuy it when it goes back up. Because stocks, like many things in life, don't move in straight lines, and sometimes they zig and zag and whipsaw you. That's what we do as portfolio managers. Okay, that's what I have for the presentation tonight, so I'm going to take any more questions you guys have. I'm scrolling back up. I think I said hi to everybody here. I'm really sorry for the log-on problems. I don't think we had any issues last time. So I did get, Tom, I said I'm going to address, vitamin A rich foods, et cetera. I'm going to address these next week. Hussein, going to do that. Um, yes, 3 drugs. I'm really interested in what these are. I think another week of R&D will give me a little clearer picture, but thank you for submitting these. Really appreciate that. And I see Nellie joined. Tom, thanks for the kind words. Issue with my computer. Can you repeat this page, please? I'm not sure which page that is that you want me to repeat. I'll go back to it. Just enter it in the chat box. This recording is available usually about 30 minutes after I'm finished. So if you know someone that might benefit from hearing what we're talking about here, just give them the address and the recording will be up there. And then you'll see another event alert sometime over the weekend for a week from Thursday night. And I already know I need to talk about some more specific drugs, mostly trying to relate to investing, but obviously if there are established companies that are introducing or have drugs in the pipeline, as Dr. Fauci said today, it's not like we can say, wow, we found something that works, now let's start mass producing it, and then 6 months later, that doesn't work. As he said, we have to start producing, whether we know it's fully successful or not, knowing that if it's not, then we just throw all of that out or bury it somewhere. So that's the nature. That's one of the reasons why these big drug companies have to charge what they do, because so much of their work, is not always brought to fruition. So at least that's been my experience. I think we're in this for the long haul. When I say I think we're in this, just because we've had 3 phenomenal market days, literally enough to turn us back into, technically, as you saw earlier, a bull market, we're not out of the woods on this. There are a tremendous amount of uncertainties. And in fact, someone could say, well, gee, why do we have such a great market day when the cases in the United States almost doubled and the unemployment number was like 3 million? Well, because the market expected worse. Now I've got, while I'm waiting for people to send me, we got some more questions. Chris, the world of investing, timing the market is the most difficult. No kidding. And often the most hazardous. You try to sell when the markets go down and then buy it back when it goes up, you will have to be correct twice or you will lose. That's excellent. That's going to get a love, not just a like. Excellent. Rex, I'm glad you didn't have any login. Hussein, in my view, the best way to deal with this pandemic is to focus on helping the sick and finding drugs to help them recover. This must become our national objective for the next few months. I believe that is the case from a humanitarian point of view and also from a medical point of view. As a portfolio manager, obviously I follow more on the monetary side effects. It's really not a side effect anymore. It's just a primary fallout of this. But I'm definitely interested in what's happening on the medical side. Thanks for saying that, Hussein. How do you think this is going to affect the election? Great. I was wondering if anybody's going to ask that. Again, this is not a political statement. If a vaccination is found, return in November, this being the coronavirus, were to return in November, that we have a vaccination, they hit you with a needle and you're set, Trump walks in. He walks into re-election. If the economy does not turn around, and if this lingers on, and if we start seeing new cases in October, I believe the public will perceive that as the administration failed, and it is very possible that Joe Biden could be elected. The odds makers, and I use several different sites, are right now, Trump went from about a 63% re-election probability down to 55. So still, more than Biden. But anyway, that's how I'm thinking on that. Saw orange juice sales skyrocketed. Yeah, all that vitamin C, right? So on Kay, Kay Naramatsu, hey, thanks for joining, Kay. Something I've learned big time. Thank you, buddy. Really appreciate that. Thanks. Thoughts on when it might flatten out for a week or so? What will have to happen? That's a great question. So I actually had a person who watched last week and says they want to become a client. We're thrilled. Thank you. But how do you move money out of one program and into what we're doing, especially if you happen to do it and sold out everything at the end of the day Monday, and then you miss these three huge days while your money's in the post office, a check being sent? And the answer is you don't do that. We would not even accept a new client today. We wouldn't accept their funds. Let me be careful. We'd be happy to have a new client today, but we would just set up the paperwork and say, look, I've got to see volatility reduce, and I got to stay out of the way of big data like GDP for the first quarter when that first comes out in April. No way I would transfer with that data coming up anywhere where I perceive there could be a shock to the system. So good question, though, Tom. Good question. For Chris, overnight markets make it even more difficult to try and time the markets. Imagine, though, who sold on Monday. Yeah, I just mentioned that. And, you lose 21%. You're just sick. You're just sick because how do you make that up? I mean, it takes such an enormous amount of alpha meaning the amount of return that you get over a given benchmark. It's just something that we don't want to deal with as far as market timing, especially in these volatile markets. It's one thing to try to market time between, well, I think I want to rotate out of, consumer staples into consumer discretionary. That's what we do as a portfolio manager. But we're doing very, very few trades right now, very few, because the bid offer between ETFs, between individual stocks, is just so wide. The slippage is not good for our clients. So what would you do if you had stayed retired in Lake Geneva? You know what? I'd be doing the same thing. This is one of my good buddies here. So those of you that know me know that we did move to Lake Geneva in 2014, and then we came back. We had no grandchildren, and when we moved there, and we had 5 when we came back. We have 6, the 6th one due in May. Hope we can fly to Baltimore to see that little boy. But no, I love this, guys. I'll be doing this as long as I'm breathing. Again, we trade our family money, we trade our trusts, we trade our IRAs, and I've got a select group of people that are friends and that understand my methodology and that like what we're doing. So, but we're glad to have you guys on this video. If you're not clients, it's okay. You want to hear what the world is as best as I can remember it from an actual portfolio manager, you're welcome to join these videos anytime. All right, we're at about 40 minutes. I can sit here all night. If I had more questions, I think I've handled all of these. Someone earlier said there's an issue with my computer. Can you repeat this page? I don't know which page that is, but just type in the box here if there's a page you want me to go back to in the slides. So, okay, we've got, again, major news items out tomorrow, next Tuesday, I think. Next Thursday, I will take note of these questions that you've asked. I'll try to handle these as best as I can. Who knows? We could be 20% lower and in another bear market next week. These are extraordinary times, but I want to go back to what I said much earlier, that my fundamental belief that this is the greatest country on the planet has not changed, not even a little bit. We grew from 2001's experience, from 9/11. We're going to grow from this experience, and candidly, as an older American, I think that the improvements in sanitation, in overall personal cleanliness, in corporate cleanliness, in public cleanliness, i.e. going to concerts, open air markets. I mean, they might not have hog heads out there and who knows what kind of grisly things that they have in some of these third world countries. That's probably gone and probably should be. So I think that all of those contributions to the overall health and sanitation of this world are going to be an improvement for those of us. Tragic for those lives that we've lost during this. and I'm very sorry, and pray with the families that have lost loved ones. But we will be here a week from tonight doing the same thing. Do we retest? Um, Now, for those of you that know, does that mean if you've had the coronavirus, do you need to retest to see if you get it a second time? No, he's talking about retest the lows. I think that's inevitable. I don't know that it goes all the way back to Monday's low because, again, that's almost back into a new bear market. But almost anything could happen right now. And that's why we're doing these videos on a weekly basis. I think it's likely that we will make a somewhat of a half a V correction back down. But if the Fed looks like it's going to backstop and a vaccination comes out, that's really the key. If a vaccination or any kind of promise of it, happens, then we're probably set. Again, thanks for your kind words, Kay. Guys, I'm ready to sign off unless you've got anything else. cb3@cb3.com is my email if you want a copy of the slides. Maybe you've had a question that didn't get answered tonight, or it's something that's private about your own portfolio. Happy to talk to you. Shoot me an email, cb3, that's Charlie Bravo, number 3, @cb3.com. And I'll answer you privately. If you want to talk, that's fine too. I would encourage you to have your friends and family connect with us next week, okay? We're going to keep doing this and hope we bring you good information. You guys take care, have a good weekend, and we'll see you next Thursday night.